So saving for a down payment is hard. And you're looking at these two loan programs, one an FHA 3.5% down payment, or the conventional 97, which is 3% down payment. There's a difference between the two, and that's what we're going to talk about today. So stay tuned. Hey, Laura Gallen here with Mountain Prairie Living, empowered by ERA Shields, and welcome to my channel. I answer questions about the home buying and selling process and talk about the real estate market. So if that's what you're into, I hope you stay tuned and subscribe to the channel. So today's video is going to answer the question, what's the difference or the pros and cons of the FHA 3.5% down payment program, loan program, or the conventional 97 3% down program? So let's talk about those. Let's start with the FHA loan program. It is a minimum down payment of 3.5%. And it's often used with a down payment assistance plan, but it can be used on its own also. So what are some of the pros of this loan program? The first pro is that it's 3.5% down. Now, it does require owner occupancy, so you have to live in the property. But one of the cool things about this particular loan program is you could buy a single family home, you could buy a duplex, a triplex, or a fourplex, so up to 4 units. The only caveat there is that you must live in one of those units, so it will be owner occupied. But you could buy your first income property this way. Another pro of this program is that the minimum credit score is 580. Now that's a low credit score when we're looking in the 800s for being excellent credit. So 580 allows someone to get in the door of a home at a lower credit score. Now, mind you, the interest rate may be a little bit higher, but it does allow you, that's a pro, that you can get in at a lower credit score. Another pro is that they actually allow a higher debt to income ratio. And if you'd like to know more about what the debt to income ratio calculation is and how to calculate your own, then check out this video here. So it's a wonderful way to get in, but it has some cons with those two pros. Another pro, as I mentioned earlier, is this is often used with a down payment assistance plan. So you could get a program that offers you the down payment and they put it on maybe as a silent second or as a grant. You might get the money for free. And this is the typical loan that they use for that program. It is a government-backed loan, so it's a little different than the conventional loan. This loan has loan limits and it varies by state and by county. In El Paso County, Colorado, where I currently reside and practice real estate, the loan limit for 2022 is $460,000 for a single family unit. It does go up for a fourplex, it's up to $884,600. So it does vary depending on the type of unit, but it will vary by state, it will vary by county, and you could easily look that up. I'll put a link below in the description box, so if you want to check out your area, if you're watching this video from another area, then feel free to do that. Let's talk about some of the cons of the FHA 3.5% down. If you're in a multiple offer situation, which is really common in today's seller's market, this loan program may not look as favorable as a conventional loan program, simply because of the lower credit score and the higher debt to income ratio, that it's a little bit more likely that that loan may not make it all the way to the closing table. So you can prevent that by making sure that you have a pre-approval with an FHA loan before you go to submit in a multiple offer situation. But it still might be challenging if you're up against conventional loans with a little bit more down payment or cash offers. Cash is always king. So that is a con of this particular program. Another con of this program is that it does require the PMI, private mortgage insurance, because obviously a lower down payment is a higher risk to the lender. So they're going to add an additional insurance called private mortgage insurance. So that private mortgage insurance does two things. It adds a little bit more to the closing costs of that loan. Oftentimes it is financed into the loan, so the loan will be a little bit higher, but it doesn't fall off this loan, meaning that the only way to get rid of the private mortgage insurance, which depending on the loan amount could be a few $100s added to your payment, is to refinance that loan into a different loan when the loan to value goes up. So it never falls off this loan. It doesn't, you can't send a new appraisal that says, hey, I'm at 80% to 20% loan to value. You can't take it off. It stays on for the life of the loan. Let's talk about the conventional 97, a 3% down payment conventional loan. Let's talk about the pros first. Obviously, the pro is that it's the lowest down payment program or loan program that's out there. It's 3% down. So it means less money to have to save. It's a little bit different if you have to save for 3.5% down versus 3% down. So it gives you a little bit more edge to get there quicker if you're saving for your down payment. Another pro of this program is that it's a conventional loan. So in a multiple offer situation, it will look a little bit more enticing to the seller when they're looking at a variety of offers. When you look at properties, having a conventional opportunity gives you a little bit more leeway with the homes that you can look at. There are many homes on the market that don't qualify for VA or FHA, meaning the condition of the home may not meet the requirements of those two loan programs. So having a conventional loan allows you to see and view and maybe make offers on a little bit more properties in the area that you're in. Another pro of this program is that in this situation, they will remove the PMI as soon as the loan to value has increased to an 80-20 minimum. You can do a refinance of the home just like in the FHA, or you can do an appraisal, submit it to the lender, and request that PMI be removed. So this loan program does allow you to remove that PMI when you hit an 80-20 loan value, when the value of the home increases over time. The other pro of this loan program is that they have higher loan limits. In El Paso County, Colorado, the loan limit goes up to $647,000. So it's a little bit higher loan limit. Now let's talk about the cons of this program. It is an owner-occupied program, meaning that you must buy an owner-occupied program single-family residence. It does not allow for the multi-unit properties as the FHA does. So you must be owner-occupied, and in many of the lender overlays, you must be a first-time home buyer. Now, I just want to clarify, first-time home buyer doesn't mean that you've never bought a home. It just means in a certain period of time, you have not owned a home. So there are limits and information on that, and I'll put a link below to that information so you can check that out. But it does depend on the lenders and the loan programs. But it just requires owner occupancy, and you must be a first-time home buyer. Now, this next pro could also be a con for some of you if you're still working on your credit, but there is a minimum credit score of 640 to get into this loan program. Now, that's a positive when you're in a multiple offer situation and you're submitting this low down payment program, because the seller then knows that your credit score is a little bit higher, so you're a little bit likelier candidate to get to the closing table. Also a positive and a negative, it does have a lower debt to income ratio, meaning that it can't be higher than 50%, preferably lower. Those two things are great positives, especially when you're in a multiple offer situation, depending on where your credit is. So those are two positives and a little bit of negatives for some people, depending on how you look at this program. Depending on your financial situation and the area you're looking at a home in, this program of 3% down may not be available, and it may be shifted to a 5% down. So you definitely want to work with a lending professional to find out what area you're looking in and what offerings they have of this conventional 97 and whether it's available in the area that you're looking for. So there's a synopsis of the pros and the cons of an FHA 3.5% down versus a conventional 97 3% down. They have some pros and cons, and of course, depending on your financial situation or your saving situation and your need to get into a home wherever you are, you have to choose the program that's right for you. You always want to work with a lending professional. I am not a mortgage broker, it's not my wheelhouse, but outlining the ideas of the loans and the pros and the cons of them from a real estate standpoint is really important to note. So when you're making decisions on which loan program is best for you, just understand those few nuances with regards to those loans. I hope you found value in this information. If you did, give it a like and subscribe to the channel. If you want to know more information about strategies to work in a multiple offer situation in this strong seller's market, then check out this video next. Have a wonderful day, and I'm so glad you were here.